another range session yesterday. While we did lift off from the high, or rather the lows of the day, and did manage to close in roughly around the high point of the day, but 25,000 as a mark still remains elusive. 24,950 thereabouts is where we shut shop, and that's pretty much been the texture all through this week. It's just been very, very ranged, and the range is only getting narrower by the day.
Yeah, you had an FNO expiry this week, you had little bit of global ripple here or there, but frankly markets really have been guided by technical forces this week more than fundamental news or macro development. At the upper end of the range, which is 25,000 plus, 500 points here or there, there is stiff resistance. Just below 25,000, there seems to be support which seems to be crawling back in. So it's been just one of those weeks where markets have moved in a predictable and a very narrow range, which frankly no one should complain. But if you expand the timeline for the month of May, I think month of May has been more than satisfactory, both in terms of price performance and also in terms of the market mood. Unlike this good old adage which is sell in the month of May and go away and come back in the month of June. Well, everything's happened in the month of May. Bulls have come back, monsoons have come, block deals have come, promoter deals have come. So markets clearly in the month of May in terms of price action have been much more satisfying. What happens in the month of June, Aisha? That I think is the debate now. I don't think there is case for nervousness and there is no case for excitement. I'm not hedging myself for the sake of it. But the reason why there is no case for excitement is because there are no triggers and suddenly the supply has started. ITC just popped out from somewhere, that BAT supply. Indigo block deal, nobody expected. IPOs, they've started. So that caps the upside. The downside, well, it will get restricted because markets pretty much know that the sting in terms of the tariff news is out. FIs are back. They are not selling at least, DIs are there, and macro is favorable. Inflation is down, monsoon is early, so there is nothing which will generate downside momentum. So like we say sometimes, I mean it's not a great word to use, but I think if we can really use that word to describe the market mood, time pass. It's like one of those time pass markets.
Yeah, do nothing, pass your time, and the markets will move wherever they have to move. But very quickly onto the global cues as well this morning, and here's the latest commentary that is coming in from Trump saying hopefully the Supreme Court will reverse this horrible country-threatening decision quickly and decisively. That's the word coming in. He's talking about those tariff rulings which did sort of jeopardize his tariff implementation. Remember, the Federal Appeals Court or the lower court has now passed this ruling to pause to consider the government appeal. The order plaintiffs are going to respond by June 5th, and the administration has ordered to respond by June 9th. So still seems like a little bit of a work in progress. Having said that, the tariffs have been reinstated for now, at least, by the appeals court. So that really is the big takeaway. So it's status quo really when it comes to stocks, or rather tariff implementation. But when you come to the US equity markets, it was Nvidia which was really the limelight, cheered Wall Street. So about 0.5% of an uptick is what the S&P 500 index closed the day with. You had NASDAQ scaling higher by roughly about 75 points, and the Dow as well scaled up over 100 points. Although in the pre-market rates, once again, it's a little bit of a simmered move that you're seeing by the US futures. Having said that, a lot more trade news, the fresh inflation data, these are data points that the market is looking out for in trade today when they open this evening. But yeah, that said, the question really comes back to what do you do in the month of June? Is it going to be as lackluster? Do you do nothing? And is that the best strategy?
So Aisha, look, the favorable. So what would be the driving point in the month of June? It will not be news. There's no calendar event. It will not be earnings. Hopefully resolution on tariff is on its way. So there is no large calendar event which really could generate upside momentum or which could disturb the market setup. So then you're left with liquidity, you're left with technicals, you're left with a little bit of macro. Let's understand the macro. We just showed you dollar index is down, VIX is down, and the other indicator is 10-year is at 4.4. So there is nothing to complain about this setup, which means that flows in general would be favorable. Then you look at the domestic terrain. The domestic terrain is inflation is down, You do have a advantage coming in terms of early monsoon, and no one right now is complaining about where the crude prices are moving. But earnings are not great, which means while the downside and the upside will get limited and restricted. There are two things which may happen. One, as markets become more and more stable, because of fresh demand or fresh supply, the upside in benchmark indices will get capped. I have a contra view, which is that for all the naysayers who've been calling the small and the mid cap stocks that, oh, there's a bubble and a trouble, my view is that mutual funds are sitting on a lot of cash, and they will be forced to buy back into small and mid cap stocks because they want the NAVs to catch up. So I think the move or the final hurrah in small and mid cap stocks is not over. If the macro setup does not change in a very meaningful manner, that means the Nifty and the bank Nifty will remain in a range. Now you may use the word time pass, you may use the word, this is a market which will remain range bound. Kunal will come and describe this market as sideways, somebody will come and describe this market as boring. But I think that's looking at the setup today, and if this extends itself, those are the terms which we are likely to use for the month of June, which is a nothing sort of a market, but you'll have to pick your spots. I was sitting with, some real marquee investors of Real India, 3-4 of them, just happened to meet them for last couple of 3-4 hours yesterday. And the message I've come back with is that don't sell but don't buy. Don't chase stocks but don't be in a hurry to sell. Don't sell, why? Because the markets are not that bad. Don't buy because markets are not that cheap and there are frankly no triggers. So you sometimes go through these phases of the market where markets will consolidate, and I think be mentally prepared for it.
Yeah, okay. Some consolidation could be par for the course, and I mean, to think of it, we're not all that far from that all-time peak, or for that matter, 25,000 at least is getting tested. The market is attempting to actually hold on to that. But the other trigger is also going to be the auto sales numbers. They, of course, are going to start coming in from tomorrow, or day after rather. We're expecting, in terms of key trends for two-wheelers, the volumes are going to continue to grow in double digits. The rural demand, wedding season, they're going to be acting as drivers. And remember, this is the data for the previous month, the month of May, that is. And tractor volumes, they're also going to grow in single digits. That's what we're expecting. The farmer sentiment is going to improve, perhaps, as the early onset of monsoon has already trickled in. For PVs, of course, the weak sentiment in urban areas, that's what we're anticipating largely. That's going to continue. And for commercial vehicles, it's a flat year-on-year growth that we're anticipating, at least when it comes to the domestic market. For the export faction of all of these companies, we're yet to see what the commentary is going to be. And then, of course, on radar is also going to be the Bajaj Auto numbers and how the street is going to be reacting to those numbers today, given that some downgrades have trickled in.
Yeah, those are not great set of numbers. I mean, expected, I understand, but they've also indicated that, look, there's a problem in terms of the EV and where the EV business is moving largely because of the availability of the rare earth metal. I mean, I was reading through the press conference. I like the fact that the numbers are at 20%. I like the fact that the stock has done nothing, so the margin of safety in terms of buying Bajaj Auto would be there. But these are not wow set of numbers. These are not numbers where you can really look back and say that, okay, incremental uptick now clearly seems to be coming in. But given that where the positioning of the two-wheeler space is moving, hopefully rural demand is coming back. For Bajaj Auto, the exports are looking up. Now for 3-4 quarters and on the trot now, their margins are above 20%, which is frankly not bad. Their EV business seems to be gaining traction, they've gained a decisive lead over Ola. And I also looked at Ola's market, Ola's numbers, and there seems to be an absolute disaster there. So I don't think brokerages based on these numbers will upgrade the stock, but based on what the quarterly dispatch numbers are, valuations are, and other factors are at play are, I think there is a serious case for Bajaj Auto now to start outperforming. See, Aisha, within the two-wheeler space, there are times when you have to pick up cycles and trends. For example, Eicher was a great trend. Then TVS became this blowout trend. Then came the Ola moment. There was a time when Hero was only enjoying a spot in the sun. I'm not saying that Bajaj has become that formidable, but purely looking at the risk-reward ratio from here for next 6 to 12 months, if I'm looking for an outperformance within the two-wheeler space, I would say it could be Bajaj Auto. Because you don't realize it, but Bajaj Auto has this ability to reinvent themselves every 3, 4, 5 years. From scooter to motorcycle, from motorcycle to exports, adding in this entire niche motorcycle experience business, which is like the KTM, and now they've got a formidable market share even in the EV space, along with the dominant market share in the two-wheeler space. Also, they've given a 210 rupee dividend, which frankly is not bad. Yeah. I mean, imagine the cash.
That's the big one.
Yeah, it's highest ever. Imagine the cash what they're generating. So these numbers may not damage the stock, but the stocks become cheap, Aisha. It just underperformed so much that if you're looking at something which is cheap and underperforming in this market, very few names come to my mind, and Bajaj Auto is one of them.
If you like this video, then like, share and subscribe to ET Now.